Okay, buckle up, Buttercup, because it's feast or famine right now. That's right. We have officially entered a bull market for the stock market. The S&P 500 has entered a bull market, but it was one of the longest bear markets in history. But here's the problem is that we're seeing a massive downside for low and middle income Americans. I'll tell you the details here in a second. But yeah, the S&P 500 closed up more than 20% from its October lows this week, marking the start of a new bull market. And it's been quite a while. In fact, it was 248 trading days. Yeah, the longest bear market since 1948 when it took that long. Yeah, quite a while, mostly because of, well, you guessed it, inflation, rising interest rates, the pesky Fed, Jerome Powell, and they're not done yet. They could raise interest rates here yet again. It's basically about a 50-50 chance whether they're going to raise interest rates again or maybe pause. Even the pause might not mean they're done raising interest rates here in the future. Even if they are done raising interest rates, they could stay high for quite a while, putting the pinch here on pretty much the entire economy. And this is where we're seeing the feast or the famine. If you have money in the stock markets, you're enjoying these gains here from the lows, especially if you have new money or if you've been investing along the way, putting money in your 401k, your IRA, your retirement funds along the way, investing at those lows. But the famine here is we're seeing some very strange data. May jobs report shocks economists, the strangest employment report for some time. It's not only America, we're seeing some big data across the world. Canada seeing jobless rates rise, unemployment numbers going up. The same thing happening here for the United States. So you would think, hey, we're entering a bull market. We should be doing good, right? But that's not the case. Take a look here at some of this. Ohio's unemployment system is teetering on insolvency. Yeah. Some Ohio Senate Republicans want to slash benefits to fix it. Minnesota unemployment insurance spikes claim after law change. This is because we're seeing problems all across the country. And now, basically, it's the tale of the haves and the have nots. Because if you haven't been putting money away for your retirement and you're struggling to get by, if you're part of that lower half, the haves and the haves nots, well, it's not good right now. We've seen the SNAP and food stamp benefits cut. There was a provision in the debt ceiling that actually boosted food and food stamps for actually veterans and homeless people, which actually was actually a pretty good provision for those people. But for everybody else, well, pandemic era food stamp benefits are no more. They're completely gone. We're seeing even more cuts to that here as well. If you are on this, you already know this. And we're looking at debt ceiling cuts to the trillions of dollars coming here over the next several years. And that's not all, because now student loan forbearance is ending here within the next, well, several days. Student loan forgiveness might not even be happening. This is for over 45 million Americans. And we're seeing headlines like this: pack a sandwich. This woman worked 4 jobs and still couldn't keep up with her $250,000 in student debt. Yeah, you can see here on an unrelated but related note, credit card interest rates in the US, an average of 20%. Yeah, and I mean, pretty much everybody has credit cards nowadays. I mean, sure, there's some people that don't, but yeah. And going back to the student loans, I mean, the average student loans are in the tens of thousands of dollars. I mean, 1 year of college is tens of thousands of dollars, depending on where you go. But yeah, the average student loan is now, their payments are $5,000 per year. And people just don't have the money. They just don't have the money. So yeah, tough times ahead. Um, my advice is, well, you gotta save for retirement, especially if you have a company that gives you a 401k match. If you don't put money in your 401k, you're basically missing out on free money by skipping that 401k match. It's like saying you don't want to raise. Remember that that 401k is your money for retirement. And by missing out on that match the company gives you, it's like saying you don't want that free money. That money is for your retirement, and that money will grow long term. That money will grow long term. So remember that, and just remember that the stock market may have some cycles. It goes up, it goes down long term. But if you look at just a graph overall, here's a chart of, say, the S&P 500, which is the top 500 companies in the United States, ranked on revenue. A year ago, we're already above where we were a year ago. We had this, one spike there. We look at a 5 year chart. 5 years ago, we were at 2,700. Now we're at 4,300. So I don't know what that is. It's maybe like 40 or 50% gain in 5 years. Again, the stock market grows over time. You don't have to worry about it, you know, you don't worry about it, every month or something like that here. This is a chart, a long-term chart since 1985. The S&P 500, which again, it's just basically like the top 500 stocks. It's basically like you own a fraction of all 500 of them. And back in 1985, it was worth $189. So think about, if you own a fraction of each of those top 500 stocks, it was $189. Okay. Now it's worth $4,300, or just about, right? So that's I don't even know, what is that, like 100-fold? So if you had $1,000, I don't know, you'd have to do the math, right? But if you had $1,000 in there, now it's worth $100,000 or something like that, right? I don't know. You'd have to figure out what the math is, but you can see the exponential growth here of how much it goes up over time. And yes, you have some dips and valleys, but you see how much it grows over time. Now this is 1985 or 1985. So what is that? That's 15 years plus 23, so that's 38 years again. So that's, I mean, I'm 40. How old am I? 42 years old. So that gives you an idea here of how the stock market will grow over time. This is, a retirement fund, or, money that you could put in there. But if you put $1,000 in there only, or for $10,000 in there, or money that you put along the way, you can see how it grows. You just put a little bit of money in there out of each paycheck, basically like your own pension account, your own 401k, your own IRA. And this is how people become wealthy over time. You just put a little bit of money in there out of each paycheck. See, back in the day when they had pensions, I mean, there's some pensions still nowadays, but that's actually what they did. It's the modern day 401k. Pensions back in the day did the same thing. They took some money out of your paycheck, okay, and the company would match a portion of it. And again, each company was different. And they would invest it in the stock market, or some stocks and some bonds. Pensions back in the day are actually the same thing, kind of, as a 401k or an IRA. People don't even realize that, but it's the same kind of idea. Okay. Nowadays, the problem is that people, you know, don't trust the stock market or whatever, but it's the same type of idea. And the people that don't save or invest in the long term, or panic at every dip of the market, or sell at the bottom, and then get scared and don't invest, and don't let their money grow, That's kind of the problem here, and or they invest at the top when everything's going great, and then they hear, they worry when, it comes down 20%. Oh, the sky's falling, it's crashing, and then they panic, right? So this is kind of the problem. You just got to let it ride. You just let it grow. But you got to remember, you got to have different buckets of money. I have a 3-tier bucket of money system. This is your long-term bucket of money. This is your retirement account. Okay, your short-term bucket of money is money that you need for your bills right now, stuff, right? And your middle-term bucket of money would be maybe money that you might need if to put a down payment on a car or something like that, middle term money, right? Okay. But the reality of it is that you got to save a little bit of money for the long term. I get it that most people live paycheck to paycheck. But what happens is if you take just a little bit of money out of your paycheck, just a couple percent, and if the company matches it, it's even better because you're basically getting free money. It really grows a long way. And you actually pay less taxes on it because what happens is that money comes out tax free. It comes out pre tax. So you actually end up paying less taxes. So the kind of way it works is that instead of getting taxed on that money now, you actually get less taxes taken out of your paycheck. So you actually end up saving some tax now. And if you invest in a Roth IRA or Roth 401k, you'll pay the tax on it now, but the money will grow tax free in the future. So that money grows to $100,000 or $1 million in the future, because again, the money grows exponentially over time. It's really worth millions of dollars or hundreds of thousands of dollars in the future. And the problem is that if you go with that mentality that, oh, I don't have any money, I can't do it, et cetera, you always find an excuse. What happens is you'll hit retirement and never have any money saved. But if you just do a little bit of money now at every paycheck, you just take that little bit of extra lottery money or actually extra cigarette money or extra drinking money or whatever the extra money is, right? And just take a little bit of that extra money and save for you, your later self. It really grows to a lot of money. So let me know your thoughts here in the comments. And you look at that graph, you see it grows over time. I'll keep you up to date here. So let me know your thoughts here in the comments. Yeah. And please share this video with anybody that needs to hear this information. This is information that I heard from people that were a lot smarter than me. And if you never hear this information, well, you'll never know it, because that's the reality of things, is that, a lot of people say, oh, I never want to invest in the stock market. It's scary. People lose their money. But the reality of it is people just don't know. And the problem is that, people might put a little bit of money in the stock market and they sell. And then, they're scared and for life, right? You just got to hear the information and see it on a chart and realize how it all works, right? Yeah. So make sure to subscribe down below to our YouTube channel and click the like button and the bell icon so you don't miss out on any new videos. I'll keep you up to date here with everything going on here in our country on a daily basis. Here's some videos you should watch next. A few minutes ago, this info just came out and it's going to affect all 50 states. And there's a red alert for millions of Americans. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.